Hi Forex traders, how's it going? I hope this video finds you in good trading. Today I just wanted to direct your attention to the US dollar Japanese yen daily chart. It's currently the weekend here in Australia, and obviously the market's closed. Waiting for the market to open on Monday in a couple of hours so I can tackle this price action setup that I've basically spotted here. What I'm looking at is an inside day signal. Basically, the inside day is a candle that's completely engulfed by the previous candle's range. So we've got the previous candle. Okay, this inside day has to be within the previous candle's range. And basically, it's a type of consolidation setup where we can build the framework for a breakout trade. Now, just before we get into that, I just wanted to do a little bit of a market analysis here, and basically what the price action trade has to line up, with what's going on the chart. Obviously, we can see that the US dollar yen has been in a major uptrend. Okay, there's been a few nice bullish signals along the way, but now the market seems to, this trend seems to have exhausted out. It's showing signs of fatigue here. Basically, if I just get my right tool out here, we've seen the market come up, test these highs, come back up, try and test them again, and we've basically failed both times up here. And I've got a resistance level marked here. I'll show you why in a second. But we've basically got this double topping action. We've also got these, very thick-bodied bearish candles occurring as well. Very aggressive bearish price action movement. So a lot of aggressive movement to the downside here. Let's just pop over to the weekly chart for a second. We can see I've just got that level marked in the middle of nowhere. So why? Because the yen hasn't come up into these prices for a couple of years now, I've had to zoom right out and just basically mark the next weekly turning point, which the next one I could find was here. We can see back in 2006 this level was respected as support and resistance. You can see that the market really used this as a swing level through here, and now here we're starting to see this price be respected again. Now if I just zoom back in here, staying on the weekly chart now, we can see all with this major a rally that's occurred over the last couple of weeks, and now we've got this big aggressive bearish power candle. And in the next upcoming trading week, it's quite easy to see some bearish follow through off this bearish weekly power candle here. So go back to the daily chart. We've established that the market seems to be like topping out a little bit up here. We've got all these bearish, thick-bodied bearish candles. Also, we've got these rejection candles here as well, where price is showing rejection of higher prices. We've got a recent bearish rejection candle as well. These are these candles where price tries to move up higher, and the market rejects the moving and ends up closing back down lower. The thicker the body on the rejection candle, the better. And you can see this one had a very thick body. That's a very strong bearish signal. Now basically we've basically established that this chart, it looks like it's very top heavy and it's moving down. So we've got this inside day consolidation set up, and the actual inside day itself is in the it's got a bit of a bearish rejection anatomy as well. But basically, with these inside days, you want to take the breakout of the low, because we're only interested in trading to the downside here with the bearish momentum that's developing. So we're sellers here, we're bears, and we only want to sell we use a sell stop to catch any bearish momentum that may develop as price breaks out of this inside day setup here. So basically what's going to happen is at the market open, I'm going to set a sell stop there. So if price does break the inside day low, my sell stop will be triggered, and my my trade will basically automatically be triggered, and I won't have to be at the computer to watch it. I'm going to put my stop above the inside day high there. I'm going to leave I'm going to leave a bit of breathing room there, because you've got to account for spread, because the market does exit at the ask price. So you need to account for spread in your stop loss. So you basically just put a couple of points on there. And that's it. So I'll leave the video there, and we'll come back and see what happened with this trade. Hey traders, I'm back revisiting this trade setup. It's currently Friday in the New York session, and this setup formed the previous weekend. The good news is, as anticipated, the trade has worked out very nicely and moved very aggressively to the downside here, creating a lot of potential for return on investment. The trade is actually still active. The trend, like the bearish trend, is basically still intact, and further downside momentum is definitely possible. The bad news is I didn't actually get into this trade, because when I basically came to the computer at the market open, the market had basically gapped down here, and never allowed me to trigger my sell stop. It's basically gapped down and just continued to roar down and never came back up and tested that entry area. If I just pop over to the 1 hour chart to really emphasize what I'm talking about here, where are we? Here. So you can see this is where the market closed on the Friday, and this is basically where the market opened on the following Monday for me. And I set my sell stop somewhere around here, and it's never come up and triggered it. So unlucky for me, I wasn't able to get into this trade, but it has worked out nicely. You can see that the bearish follow through here was very nice, and basically the technical analysis that we done in the previous video was pretty much spot on. Now currently this market is still, the dynamics are all bearish, because we've had some pretty solid aggressive selling days here. The market's gapped away from the mean value a little bit, and the mean value was basically the what we use, the 10 and 20 EMA. Just for you guys who don't know that, the 10 and 20 EMA maps out the mean value for us. And I won't go into the details of the EMA here. You can check out the site if you want to find out more. But basically what we're waiting for now is we're waiting for further corrections into the mean value, and testing these swing levels as we go down, and we're just looking for any further bearish price action to develop with this downward momentum to get in, because we're basically looking to sell high, sell the rallies, sell on price action, bearish price action that develops up here somewhere. If we do get that through swing levels like that. So if we get a sell signal up here, that'll be great, and that's basically what we're looking for now. That's the game plan. So that's basically it for this video. If you want to learn more about trading inside day breakouts, or analyzing price action like this, or just learn price action at all, just come check us out, www.theforexguy.com. There's plenty of information there, and other videos and articles you can check out as well. Hope to see you there. I'll see you in the next video.